Welcome to Daily Market Briefing. I'm your finance reporter, here with the market setup, sector rotation, and the headlines that matter before the next session.
SPX jumped plus 0.1% as market volatility poses a serious risk for new retirees. Here's how to prepare: lifted software and consumer staples. Welcome to your daily market briefing for 2026-04-02. Broad risk tone was mixed, with SPX at plus 0.11% and NDX at plus 0.11%. Relative strength stayed with XLK, IGV, while GLD, XLY lagged the board. Here is the broad market snapshot. S&P 500 up 0.11%, NASDAQ 100 up 0.11%, Dow Jones down 0.13%. Next, the ETF curve set shows where relative strength and weakness developed through the session. Leaders were technology, plus 0.82%, software, plus 0.65%. Laggards were gold, minus 1.94%, consumer discretionary, minus 1.50%. Across global markets, the session leaned risk-off globally, with broad market retreat across regions. Asia was under the most pressure, with Japan and Shanghai leading the retreat, while United States and North America held up better than the rest. Stepping back, broad risk tone was mixed, with SPX at plus 0.11% and NDX at plus 0.11%. Relative strength stayed with XLK, IGV, while GLD, XLY lagged the board. The stock market Fear and Greed Index is 25, which sits in fear. That is down 1 point from the prior reading. That points to a cautious tape, where traders still want confirmation before adding risk. On the S&P 500 heat map, leaders were software plus 0.65%, consumer staples plus 0.55%. Laggards were consumer discretionary minus 1.50%, healthcare minus 0.63%. Policy expectations remain a major driver, and upcoming macro releases is one of the next data points traders will use to calibrate the Fed path. If that data surprises hot, long-duration trades could stay under pressure. Commodity action was split. Crude oil led, while gold lagged, so the move looked selective rather than broad-based. The index board leaned higher, with Dow carrying the weakest tone and Nikkei holding up best. Mega cap curves were mostly positive, which points to a broad tone move more than a single name story. Forex showed a risk-off currency tone, with the sharpest move in Euro-USD and the best relative strength in USD-JPY. Crypto remained under pressure, which helps confirm the broader market risk tone. Bond curves suggest yields were mixed to lower, so rates still mattered for the session. The main focus stayed on leadership concentrated in software and consumer staples. The pressure point remained consumer discretionary and healthcare. Tomorrow's setup comes down to the next macro events, yield direction, and whether today's leadership can hold. Follow-through on market volatility poses a serious risk for new retirees. Here's how to prepare. CNBC also matters because the tape is still sensitive to macro headlines. That is the key takeaway for today's market. Broad risk tone was mixed, with SPX at plus 0.11% and NDX at plus 0.11%. Relative strength stayed with XLK, IGV, while GLD, XLY lagged the board. Keep watching policy signals, index leadership, and the next macro catalysts. Subscribe for the next daily market briefing.